Time the credit policy would have been tabled, and before the credit policy is tabled, what are we debating and deliberating? Well, we are debating and deliberating that is there case for Reserve Bank of India to cut rates, and if there's case for Reserve Bank of India to cut rates, what are the factors which are at play, which in a sense are going to be the driving factor which will determine Reserve Bank of India's policy stance? First is growth, second is inflation, third is liquidity, and fourth is the monetary policy, or perhaps the fiscal policy. So let's look at all those factors one by one while we've showed you a glimpse of that. Growth. India's growth has come down from 8.2% same time last year to 6.4. Inflation, great news, is very much under control at about 5%. Credit growth, which is again in reflection of the economy is moving, has not plummeted, but it has come down from 14 to 11 on a size of on that kind of a size. If the economy comes down, then there is a bit of a challenge in terms of managing the future if the credit growth slips. And then there is liquidity, which is a function of where the credit or where the availability of credit would move. Same time last year we had surplus liquidity. Now according to estimates there is liquidity deficit of 3 lakh crore. So there's surely a case of liquidity injection and surely a case for rate cut. Now can we look the other way from what the world is looking at a time when tariff wars are real? Will Reserve Bank of India like to stimulate the economy from the monetary side, given that the fiscal side has been taken care by the government beautifully? The other factors which could have impact on the on the monetary decision is crude prices, 72 under control, 10-year 4.2, and the dollar index is at 107, which frankly is not far away from where it was same time last year. So now that we've set the template in terms of what are the priorities of the government, it's always keeping inflation under control, ensuring that growth remains strong, and also ensuring that the impact of the monetary policy in a sense is widespread so that the economy, which has gone slightly off track, it could come back. Siddhartha Sanyal, and Chief Economist and Head of Research with Bandhan Bank, joins us now. What is your sense, Siddharth? Are we in for a rate cut or are we in for only signaling?
Well, Nikunj, I think you summarized the backdrop very nicely. So very clearly, there is a strong case for monetary easing going ahead. And I think that easing process has already started. Now the easing part, monetary easing part, can actually come in a mix. There is a tool there is a tool of liquidity, there is a tool of weakening of the currency, there is a tool of rate or policy repo rate. I think the RBI is rightly focusing on the liquidity part very strongly. The currency is also easing a bit, that's why that is leading to some more monetary easing. And there is a question of rate. My sense is that we are very close to a rate cut also, but I'm slightly tilted not towards a rate cut in this particular policy itself, but this particular policy is a time when there will be a lot more support on the liquidity side. The liquidity scenario becomes a little easier on the global side. Possibly the dust settles a little more over the course of the next couple of months, and that's possibly a much better time for rate easing to start also. Having said that, it's almost a done deal that going ahead over the course of the next few months, you will be seeing rates coming down by about 50 basis points. Whether it comes down in the next 2 months or 4 months, it's possibly the debate.
Okay. What happens to credit growth? Will the credit growth come back if there is a 25 bips rate cut, or right now the need of the hour is to hit hard with the 50 bips rate cut?
Is it for me?
That's right.
No, I'll not go for if at all there is a rate cut, I'll not go for a large rate cut just at this moment. The currency is way too volatile. The global situation is way too volatile. In fact, my bias, again, at the cost of repetition, my bias is to stay on pause at this moment on the rates front, provide liquidity as much as possible, because that's actually the need of the hour. You need durable liquidity with the banking system for credit growth to happen. If you have just a rate cut, the rate sensitive segments will start benefiting. But a much bigger benefit is from credit growth to the so-called productive sectors of the economy, which can come only through durable liquidity in the system, which was not that much there over the course of the last 2-3 quarters. I think that's the need of the hour, to give a lot more liquidity. And if at all a rate cut happens, a token rate cut rather than a big bang rate cut.
Liquidity, can only liquidity injection is good enough?
That's the most important thing at this moment. If you actually cut rates, will you revive a lot of investment projects? The answer is no. What you will do, you will possibly start giving a few more loans, etc., which are external benchmark linked at a cheaper rate. But you have to first, if you want to drive through the banking system, and India is a bank-based system, if you drive through the banking system, you have to give a lot of durable liquidity at the first and most important precondition for credit growth to take place. Now, you don't want necessarily credit growth in very short cycle segments, which are consumption related credit growth or unsecured loans, a lot of unsecured loans. You possibly eventually want a lot of credit going to the productive sector, going for investments. For that, liquidity is the first major precondition, and we had a dry spell on that for a significantly long period of time in the last at least 1 year, if not for longer. So liquidity you have to give, then your rate action will be much more effective.
What exactly are bond markets expecting from tomorrow's MPC policy?
Nikunj, you have to repeat a bit.
Now, what exactly are bond markets pricing in? Are bond markets, which is a 10-year paper, is it already pricing in liquidity injection and a rate cut?
I think yes. There is a very clear expectation on the part of the bond market to expect continued liquidity infusion, and I think there is no doubt. Also, there is an expectation of rate easing to see. I agree with you.
Would it be a wise idea to move before Fed moves, or do you think RBI should wait for clarity on tariff and Fed, and then they should take maybe a late but rate cut after global clarity emerges?
Well, complete clarity never comes. As an economist, as a policymaker, you have to take some calculated risk at some point of time. Maybe over the course of the next couple of months, the dust settles a bit. Also, if you see, when the US had started cutting in this particular cycle in September, they had delivered a 50 basis point rate cut and had said that there was actually an intense debate in the month of July whether to cut or not. They decided not to cut at that point of time, and at some point of time they felt a lot more confident, and that's why they doubled up in the month of September. I'm nowhere suggesting that what US has done will necessarily be a good strategy for us, but that is also another can actually be another approach, that you give a lot of liquidity at this moment, give the banking system a lot more comfort on that particular aspect. Do not rock the boat so far as from your side, so far as dollar rupee is concerned. There is enough rocking from other sides, and you actually give a guidance which is suggesting that we are very close to a rate cut cycle, and that might start pretty soon if as and when the dust settles.
All right, really appreciate your time and glad you could join us with your valuable inputs. Same time tomorrow, we pretty much would know what RBI has done, what they're thinking, and
having said
yes,
that,
yes.
Having said that, I'm also cognizant of the fact that two of the 6 MPC voters have already voted for a rate cut. So it's possibly just a matter of 1 or 2 voters voting in favor of a rate cut, and then it happens.
And of course, the governor has the veto. And having said that, the governor has to veto, so whatever everybody else is deciding, the governor can still trump it. I really hope that it's about the rate cut, because we all think that rate cut perhaps is the reason why. I mean, there are 2 ways to only stimulate the economy, fiscal and monetary. Government has already done the fiscal bit. Now it's off to RBI to do the monetary bit. I mean, can I put it that simply?
I think monetary easing is needed, and at the same time, I feel liquidity is the most important tool of monetary easing at this juncture.
Well, let's hope we get much more than what we want in terms of RBI move, and it is the first policy from the new governor.